It's the Crypto Sniper. Yes, welcome back. Quite a break since my last YouTube. In fact, I'd intended to do 3 YouTubes slightly closer together than they're turning out now, because there were 3 scenarios that we wanted to cover. One was, hey, could this be the bottom, which we already covered and spoke about the rising wedge with 3 impulses. We'll go back and remind you of that one. There were, however, 2 other scenarios. And over the last 10 days, we've actually been overemphasizing a different scenario to that last YouTube of the 11th of January, the bottom call. And what one is it? Well, it's time for you to get a chance to catch up with our premium community, for which we've been updating on real concern and pessimism. And what scenario is that? And then I mentioned 3. What is the 3rd scenario that we are discussing, and how does it play out in terms of the global macroeconomic environment for crypto? Because while I'm talking about crypto and Bitcoin is the god market of crypto, the chart you're seeing is the US dollar index. We were harping on for an extended period about the fact that the biggest run in Bitcoin in the last few years in percentage terms had taken place during a sustained spell of dollar weakness. Many people putting it all down to the crypto. That was our first cup gold nugget break that occurred after the low, that extreme high of the dollar index. And we've covered this before in other videos, so I'm not going to explain this conceptually, but that was the $3,000 low in Bitcoin on that spike high. From there, we got the squeeze, the first inverted in a new trend, and dollar down, down, down. During that period, you got the first cup gold nugget, which was the early break on a very minor down leg of after the 3rd high, mainly because you had such an excessive spill on the 2nd down leg that there wasn't any scared money left to get out after that was reinflating. So we then broke, and that was your run from the 9,000s all the way through. That took you eventually to the 64K in crypto land. And this all occurred at the same time as 7 trillion was being proliferated. Dollar was being smacked. The god market of fiat was going down. This saw a lot of institutional money looking for risk, hunting for a place to hide, having concerns about the debt markets, and putting small allocations in the crypto realm. Now, I want to explain a few things conceptually. The price of Bitcoin is determined at the margin. What does that mean? What does it mean when people talk about a market being determined at the margin? It's not the 99% that have already bought and are sitting and have been hodling since $10,000, that are crypto diehards that were maybe involved from 2011, 2012, 2013, original gangsters, all kicking around, that never sell, never trade their Bitcoin, but the odd exceptional moment, but in some instances not at all. These are not the people that are determining the price. It's the new money and the scared crypto holders that are getting out that are determining the price. Now, that used to be retail, skittish, leverage-based traders that would then scare themselves, spook themselves in and out, and create bull and bear cycles depending on the drivers in the crypto industry. However, as we've got more institutionalized, what of course is happening is that you're having the people, the real volume. Remember, it's not Joe Schmo, retail trader, selling his 0.05 BTC in the market. That's going to be a market price setter. He's going to be a taker all day long. It's the bids, it's the layers of buying and the layers of supporting on the Bitcoin chart that will determine who that is. And that is institutions. We are accumulators at this level, and we are distributors at that level. There's always a price they know that they will sell at, and there's always a price that they will buy at. They're not saying Bitcoin $1 million by the year end, or Bitcoin $100,000 by the end of this year. We are holding till 100,000. doesn't. They will have a level that if it's reached, they will distribute and lock in, and they will treat it as they've made some alpha for that year. They'll look at reaccumulating. Their time spans are typically year-based. They have bonuses, performances, everything that is determined on a year-to-year basis. So they eat once a year. That doesn't mean they aren't earning fees, salaries, etc. more frequently than that. They might be doing a roll-up, they might have high water marks, they might have lots of ways, but their end-of-year performance is everything that matters. In short, they will, if something moves too fast to the upside, they will see it as a point of taking off profits. They don't say to the moon. That is the curse of the momentum retail trader. So what is happening is these same institutional players, as we've covered before, and that's why I'm going to do this real short drill down, are involved in other markets. And in fact, they've only put a small percentage of their risk on assets into the crypto realm. Now they face uncertainty about legislation for crypto. The concern that the central banks are very interested in the stablecoin market and their own central bank digital currencies and how that'll clash. Plus, the biggest concern in the room, which is the driver for this second scenario, and there's three, so I'm only going to cover case scenario number 2, but this is actually our most dominant one in our community that we've been talking about over the last 10 days, is the Fed's tightening commitment to tighten. And in fact, may just be able to still find this from inside our community share. I was talking about the inflation and how it's suddenly gone from being transitory to being most disorderly. And this is a great problem for the overall Fed and the central banking cartel, because what that actually means is that they are now suddenly caught behind the curve. So this chart is one that, as I've mentioned, I was discussing at length with our community. This is what's being called behind the curve. Boom. That is the blue 10-year Treasury yields currently, and the orange, yes, that's 7% over there, is your 1 year rate of change CPI. Don't forget, their CPI number is an absolute lie designed to understate the inflation. You're probably looking at closer to 16% if you go by your shadow stats numbers, which is still a government number of 1982 when under Ronald Reagan. That is called very far behind the curve. And in fact, being underpriced, that many people aren't thinking about, is an attempt to maybe re-establish credence for the Fed and possibly even doing a double interest rate hike. Very few people talking about this possibility. But when you're caught late out of the blocks, you've got to do a whole bunch of running. They are behind the curve and they are late out of the blocks. That is where the Federal Reserve is right now. In short, they could be doing some pretty sexy tightening in earlier than many people expect. And one of the best ways to kill a monster is to kill it when it's small. Having failed that, which they certainly have, we've been perpetual inflation callers, particularly once there was payments to the man in the street. Don't forget the previous inflation, when it was only going to the billionaire class and only they could borrow for next to nothing, unlike you on your credit card paying 16, 20, 30%. We got asset price inflation. It was there, but it was in asset prices. Billionaires don't push up cost of loaf of bread. Neither do they push up gas, heating bills, or the oil price. They do as much flying, driving as they want to anyway. They don't suddenly go, oh, it's cheap, let's go for a drive or a flight in our jet plane. They're doing it anyway, they can afford to. So what has actually happened is once the more man in the street started to get stimulus, etc., never mind the fact that we also have supply shocks coming in from the what feels like manufactured supply chain issues, crazy relationship with China, which is basically the workshop for the rest of the world, and in Europe's case with Russia, which is basically the energy provider. 40% of all Europe's gas comes from Russia. So you're getting supply shocks as well coming into all of this after our economy has already been shrunk by the health event of March 2020, which was when we called a short on oil. Very interesting. Oil has now gone up exceedingly high. We've said before it would not only go above $100 again after its capitulation. Remember, we were the only ones to call single-digit oil when it was trading in the $67 mark in 2019. Well before it happened, we also shorted Plains All American from $30 to $3. Tullow oil, and even a cruise liner, that's right, even a cruise liner called Carnival. And we didn't understand how, with oil getting cheap, why this was a short. Well, it was what ended up being the event of March 2020. So amazingly, when you get the technical view, it's amazing what it can do. So you're saying, well, hey, I'm on a crypto channel and I'm hearing about oil, the dollar index, and everything else, because this is how it works, kiddies. You think everything about crypto and the price of crypto is going to be just determined by crypto fundamentals. And this is your great error. It was like that when the only participants in there were people that were exclusively crypto interested. What happens as you get institutional money is they are money interested. That means they have Forex exposure, commodity exposure, hedge fund interest with bond derivatives, and all other forms of asset classes for which they are playing in all of these games. And in fact, crypto is a small element of it, but they are the price maker as the only real, meaningful new money in, and also take off money out. The crypto hodler is hodling. He isn't determining the price. The retail trader is decimated after the halftime oranges and the 55% correction and the subsequent correction on Bitcoin price. So what is actually happening is when Bitcoin is in a God market bull mode, it is often antagonistic to the dollar. When the dollar is in a contraction mode as the God market of world currency fiat, Bitcoin was let out to run during this period. And many people failed to recognize why this was one of the few rare times you could be multi-period, long-term leveraged, was the sell-off in crypto, the dollar index to this point. You can see that roughly from May, after a double W bottoming, the dollar has largely traded up, which has been negative and been a headwind for crypto, and many people failed to understand that. In fact, I'm looking at Bugatti buying YouTube channels who just don't conceptually talk about any of these other concepts. And this is the difference from people that have grown up trading on crypto, grown up investing in crypto, and have no exposure to the real world markets. They don't have the understanding of what the Federal Reserve is doing, and they don't understand that this is a tightening cycle, and that the Fed is likely to want to regain the initiative for being behind the curve, ergo that chart I showed you, which will mean that they will try kill a monster when it's small. It's not small, it's already significantly too big. They've failed already in essence, but they're going to go through the motions of pretending they haven't yet failed, and that means they are going to be hyperactive to the firming side. This is why the dollar has been firming. So if we have a look at that round about somewhere in late May, round about June, and we pull up the Bitcoin chart so that we can discuss this with you, and we'll go split the screen to make this point, and we'll head right the way up and get Bitcoin on a similar time frame. That was a 2-day that I've put on there so that we can get a reasonable amount of history. And I've gone and cocked it up. Well done, fool. Let's go in there and put the dollar index on the bottom. Why not? Just swap sides. Okay, here's our boy, Bitcoin. Let's put him on the 2-dayer. He's on the 2-dayer. Let's put this fella on the 2-dayer. Here he is. And let's wipe our face of all previous annotations. So what were we saying? We were saying to you that roundabout mid-May, going to end of May, that you started to be in a set of circumstances where there's 2022, we're lining it up with that. By the way, better idea for Bitcoin is actually to go with the futures Bitcoin, because that is a 5-day trading market. So here you go, futures of Bitcoin 39.8 closed, line it up with the 2022 that you got there. And let's get 2021 roughly under it. 2022 and 2021, roughly under each other there. So we have 1 year of dollar index and 1 year of Bitcoin. So here's the first low, that W low coming in. Boom, first low. Rally of strength, dollar. First low. It was round about the beginning of the year. Bitcoin, relative high, a relative high. A small period, there's still a lot of carrying momentum in Bitcoin, falling wedge. Pretty ugly sketch, I should say. Let's take the lines and draw it better. Falling wedge at the low on the rally here. You had, with some rolling momentum, late chasers in to Bitcoin, some rolling momentum that gave the rising wedge here. This was all being built on marginally higher highs and grinding upwards in a less accommodative dollar environment, rising wedge. You then got the weakness back down, but this blow-off exhaustion that had all the dip buyers, a lot of it retail money, building up a lot of leverage, chasing in at the wrong time. These are all your moon boy channels that are big on chasing the dips, that think it's all about the crypto, it's all about the new money, because the total amount of assets in the world are around 700 trillion. It's a matter of time before Bitcoin becomes 10% of that. There's a lot of maxidom thinking. There's a lot of, it replaces that. They don't think that there's only actually one Mona Lisa, and that doesn't mean it's going to become the net worth of 700 trillion, all the assets in the world. But nonetheless, it doesn't stop maxis from going really off the chart bullish. Now, this is another localized low that was close to but slightly higher on Bitcoin. So during this period, Bitcoin was ceasing to go down after this. You can see it June, roughly May, mid-May, going into sort of 2/3 of the way through May here. You're getting it round about there. You stopped heading down so much on Bitcoin because this was basing, and you were getting actually a little bit of support from the dollar index in this correction, but that was because of this divergence. You went up too far, you had a lot of carrying bullish momentum. The Bitcoin Google searches would have been absolutely at the highest, and that's why you overcome that dollar strength for a period. So you're actually going up on Bitcoin in a strong Bitcoin, and you overexhausted. This was hyper extension period into the 64K, and that's why you crashed because you were hyper extended, even though you got a little bit of a tailwind for a while. Then the dollar started to climb up, and roughly here, this falling wedge, that was around about July, 2/3 of the way through July. Over here, round about there, you had a move up on Bitcoin during an indifferent period, a flattish period, to September on the dollar index, largely flattish. So it was not highly supportive, but it was not a headwind. Then the dollar moved again from September through most of October. Throughout September and October, you actually got your correction. So there was a little bit of reflation going on here. A little bit of reflation. Then you dipped down on the dollar, and that gave you a surge on Bitcoin. Dipped down on the dollar, a bit of a surge up to this point. Round about topping mid-October, November. Here's the softness in the dollar, seeing it coming off. And then from about mid-October through to almost the beginning of December, it was non-stop up for the dollar. So mid-October, you got one more marginally high, which again was a bit of late momentum into a bit of early dollar strength. You were over here, and then bam, again overextension into the low. Now what's actually happened is you've kind of had a little bit of a corrective period on the dollar index, but now you've had a second run of hyperextension in Bitcoin during a period when the dollar was firming, and now it is weakening. It is weakening indeed. Okay, so you can see this relationship going up strong in Bitcoin on marginally higher highs, like this, like that. Let's go with the pink because I've already drawn it a couple of times. And marginally higher lows, like that, into rising wedges, and this marginally higher high, whilst the dollar is strong, is typically a hyper-extension period for Bitcoin that usually ends in a correction. Correction, highly corrective. So now the question becomes, what is the dollar index going to do macro, and thereby what will that macro mean for Bitcoin? And you've got all the bull callers. This is just I'm seeing the tweets, they're getting more frantic when the market is being leaned on than ever before. The maxis particularly, they're currently saying, make all the chance of buying Bitcoin you can, sub 100K, it's going to 1 million. So these are the guys, Bitcoin is 10% of 700 trillion, because that's how big all financial derivative markets are, etc., etc. What I call the Chinese mathematics thinking, because it's the new money. And unfortunately, they don't see that there could be multiple systems of existence, and that never worked out for gold. It's only 10 or 11 trillion big, even today with 3,000 years. But nonetheless, let's leave them to it. What is the dollar index doing next, so that we can get a better idea of what kind of market environment is crypto going to be facing? And this is likely to upset a lot of people, this scenario. And as I say, we've been talking about it in the community a lot, and we're largely highly defensively positioned for what we see are coming. Why? Because it's a negative market for Bitcoin. Why? Because it's going, people will say sentiment index. Sentiment index is terrible right now. So let's just go and get that before people say that in the comments. Fear and greed index crypto, as if it's 100% counterintuitive indicator. That means because it's bearish, 19 at the moment, there you go, that means it has to be a buy, because always everybody is wrong. No, I'm afraid not. In actual fact, you can have bearish in fear and greed index and grind lower, 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 and have second stage crashes. And in fact, the original fear and index was correct. There was stuff to fear. And I would argue that this is one of those times. Right now, trading 3988 against Tether on Binance. It's a very negative environment for crypto. And as I say, been updating the community. I was unfortunately sick, guys. I didn't get to make much YouTubes. I was sleeping everything off. So you're hearing it now, and it sounds expedient because the market's going down now. That is what it is. This is scenario number 2, and it is our dominant scenario, and has been for a week plus. And even before that, we were not flagrantly bullish. So let's go to that dollar index and finish the dollar index analysis. Now, this is not a secret. We've been on record on this analysis. So for those again, because whenever you do an update, there's always people saying, oh, that's expedient of you, or whatever the case may be. I want to highlight that this has been our long-run macro dollar index view for an extended period. I've even done a number of public presentations with this same very chart. I have tweeted this chart months ago, months and months and months ago, and it's continued to develop as things have gone on. This is your dollar index. By the way, dollar index is made up of the euro predominantly, but it's also got a bit of pound, the Swiss franc, and the yen, and a few other currencies in there. But it is our proxy for dollar strength. You can get a long run view on the performance of the dollar here. Now, I do it normally on log scale. This is how it looks. So historically, since 1981, I was at school in 1981. I was barely starting, I think it was just about senior school. Since then, we've had ups and downs and tightening on the range of the dollar. Plus, we've had marginally lower lows, which is long run falling wedge structure. This is a long run falling wedge structure. This is your first impulse for us into a crashing low. This is your second. These were macro, huge, long, multi-decade bull markets in the dollar index, followed then by equally long bear markets to the downside. This was your first setup in a new trend. This was super powerful. You typically get major trend reversal. This is Triffin's dilemma, the need for more dollars, the ever escalation. And this dovetails perfectly with the fundamentals of the ever escalating debt outside of America in dollars. Let me say this again, because people are going to misconstrue this. The escalating amount, yes, there's a lot of American debt in America, but that is in dollars for a local currency. The external dollar-denominated debt, that is escalating in the emerging markets, in the euro-dollar markets, which is essentially where debt can be raised for dollars outside of America, and all other nation states from Russia, China, Mexico, South Africa, Turkey, buried in dollar-denominated debt. They cannot print dollars. They can only print their local currency under their local central bank's remit. And as a result, they print their own currency to purchase more dollars to make interest payments on their debt. And you always need more dollars than you borrowed to pay back interest. That is the tertiary extracting game. That means somebody has to give you their dollars. But they've also got debt to pay back. Thereby, you get a shortage of dollars. Thereby, you get an inherent bull market in the dollar. Everybody goes, but dollar fails, fiat system fails. Yes, the fiat system fails, and the entire world is on a fiat system, and it will fail in order of size by those that are short dollars first, until all those have failed, and that will cause a final death knell strength spike in dollar as everybody tries to hoard dollars as they see their own currencies failing before it dies against other things. Now, it will initially go stronger, and this is the spell of the cycle that we're in. We broke this falling wedge, and this was your first upside continuation pattern of a new trend, and it's our assessment that this is your second. So this draw has been going with us for a long, long time. We expected a down leg. It actually came pretty far down. Given the amount of stimulus they created, they killed the dollar down pretty evenly hard. And now you are getting a snapback rally. So this structure, when it is completed, could imply anywhere from 111, 110 upwards. We're guessing at the moment with that target. It's a bit aggressive. Somewhere around, we would project from around here, you would get in and around the 100, approaching 110, potentially beyond. This is a sustained period, but we haven't got that breakout yet. We're still setting up the structure, and this is a monthly chart. You are looking at, this is like watching glaciers melt. It truly is macro significant, but these dominate in the end. And so the best game is actually playing with dollar strength generally on your side, unless you're expecting a significant period of correction. And I don't think you're going to have too many of those, but you'll probably get our target of 99 on the dollar index, and then a point of some correction. How far back it will come, I don't know. During that period, you may get a lull. That period could be supportive for crypto during that time, but it doesn't have to necessarily be that lengthy. We don't know how far it will pull back. If this scenario continues to play out, it is a probability, a possibility. The probability might be 5%, it might be 55%, but the dollar strength trade is the one that keeps serving us. So we are short euros. Euros against the Swiss franc, euros against the dollar. So let's go and drill in and show you this structure a little bit more closely, and to say why we say 99 before you get a rest, and then potentially a breakout of this, which will take you right up to 110. And a lot of currencies will be running into a lot of problems. And you know, the narrative is now catching up to this potential FX moves, because the Fed wants to go on a tightening journey. What happens if they start accelerating their tightening while Europe is actually doing nothing of the sort and is actually proliferating euros, still doing buybacks, and continues to be dovish, and the Fed becomes hawkish, is the dollar appreciates at the euro's expense doubly. And remember, those are like a seesaw with a fulcrum where my hands are. You don't usually get an event where both go up. Something has to be going down at big global corporates, treasury departments. These are global macro companies. Think of Microsoft, that are earning in euros and dollars and yen. They will have what's called a treasury function, and they will have a bias to holding one currency over the other. That means they'll exchange dollars for euros or vice versa, depending on how they are feeling. So they're not going to sit with huge currency risk all the time on their books. And if their impression is that the Federal Reserve is going to start a cycle of tightening and has catch up to do, they could be driving the dollar. And that is self-fulfilling, because the more people think that will happen, the more they'll move and position early for that to happen, and the faster these things actually come about. So let's just take you into the weekly chart. So here's that W that we were talking about, and this was your Bitcoin buoyancy period. Now, I think we can even manage to go back to the 2-day time frame, and we can show you on the other dollar index that I've annotated for exactly this purpose. So, why 99, you say? This is something we've covered in our Market Sniper channel. You should be watching all our channels, in fact. This is Reset, by the way. We have 3 circles: Reset, Market Sniper, and Crypto Sniper. And the more we get into Reset, the more these 3 channels converge, the more you actually need to know all of them. I had to handle them separately, because there was people who came in through the crypto door that only want to hear about crypto. They don't realize that this is crypto. The failure of the fiat system is crypto. They don't realize that Reset is crypto. It's the folding of an old system into a new system. People that came in and only traded FX and equities and hated crypto and said, what's this kiddie nonsense? I'm not part of that generation. They don't realize that that's their new system. So you come in through whichever door you come in, but all 3 doors open into the same igloo, and it's cold inside. And you've got to understand the role that every single entrance point is going to play in this new world order system they will be dropping on your head. So this is an inverted head and shoulder. We've covered this at length in the Market Sniper, and it's time that crypto guys realize this. Those are 2 shoulders, and this is in essence a W bottom. And since this period, mid-May, crypto has had a tough time of going up. What did we get? We broke out over here. This is what we're illustrating. You had the dollar strength. You ran through the 50% fib level. This is the 50% fib level. I can bring that just into shot. It's slightly off out of picture there. Let's clear and just get that real estate back. of the column. You ran to your 50%, the 100% at the spikes. That was the high spikes at the point of the March 2020 health-based event. Bang, over there, and that is the low. Your neckline sits on the golden mean. This has such excellent structure in it, people. This has such excellent structure in it. To not see the potential of this playing out is to be foolish and to look a real technical gift in the eye. Left shoulder, right shoulder, and this was your W bottom and how it went. What happened? Well, we bunched up and we hung out at the 50% for a while. We thought this could be a flag for a while, and then it looked a little bit softer here. It failed to make a full other side, and it actually squeezed a little bit, and it spilled in the direction of the neckline, a classic case of a revisit. And actually, during that weakness, we reported internally in our community that Bitcoin's performance was exceedingly disappointing, whilst the dollar actually had a weak spillback. It was exceedingly disappointing. In other words, the bid never fully came back in for risk-on assets. This highlighted that Bitcoin was not the fastest horse. The notion that the maxis and crypto fans generally will always only get what they the number one, the best runner, the biggest. No sir at all. Bitcoin has not been the fastest horse and has not shown relative strength recently. Let's put the Bitcoin on that particular period so that everyone can see it, and we'll take Binance. In fact, we'll do, as we did the other time, the 5-day trading futures market. We'll put it back on the daily here, and we'll get this one down to the daily so we can highlight on that event and why I say it was a real red letter day for crypto because of the lack of strength. So that's 2022. Let's just pull this over. 2022. Let's pull this over. Get it December aligned with December. So we got 2022 almost aligned, not quite. Let's get it better. Come on. They should have a button for this. Trading view. Hear me now. There you go. So the 2022 is the beginning of the year. December. During this period, actually having hyperextended, Bitcoin then underperformed. During this period, December, dollar was down to December the 13th, small rally and heading down. It was over the course of December, a downward trade. Unfortunately for Bitcoin, Bitcoin could not make very much of it. My apologies, guys. Got it also about face. This was the dollar. It was a downward trend from December to the beginning of 2022. Literally to the day. That's a downward trend along the red line, low. During that period, Bitcoin was weak. Then you got a little bit of a bump on the dollar, giving strength, and crypto spilled. It finally got a little bit of support in and around the 12th on this basing period. But it couldn't stay strong for very long, and it started to slip as the dollar has climbed. So this has shown a complete lack of strength, even when the wind that was a headwind took a small spell and was a tailwind for a small segment. This is showing people are afraid. And the people I'm talking about are the institutional margin setting, price making buyers that are institutional. In short, institutional money are in risk-off mode. Institutional money are in risk-off mode. Crypto as an asset class that they have fairly small allocations to, however, still amounting to big money as the new big money, are actually being reined back, even when there isn't a bid for the dollar and the dollar is easing back. So there's a true fear in this scenario. Now, understanding this and that we've had almost a neckline revisit and we're going back up, what are we seeing coming next for the dollar index? Well, we're seeing this going up a little higher and potentially making a continuation pattern for heading to the upside. This is how your friend crypto is behaving. Now, some of you will say, but the cycle's extending. We said the cycle's extending, and now essentially, if there's further upside on the dollar and Bitcoin goes lower and lower and lower, it's already lost quite a lot of percent. That's 39% off 69. That is $30,000 off 69. That's 3 out of 7. That is pretty high in terms of percentages. It's 40 plus. And you're talking higher dollar, meaning further loss of value to Bitcoin and the altcoins, which are higher beta to Bitcoin and will lose bigger percentages as a general rule. What happened to extended cycle? So here's how cycles work. The cycle for crypto solely, the cycle for crypto has indeed been extending. The cycle for crypto has indeed been extending. This is an example of using cycles, and I'm showing you a 239-day cycle, a 93, and a 57 cycle that have all generally called highs and lows, this pink line on the Bitcoin chart over here. So the low on the cycle low is often coincided with relative low points and the high with moves up. You can see it there. Now what happens is you get other cycles that are bigger, more dominant, and are of all asset categories that are affected when a major currency is getting stronger. And the crypto cycles that are endemic just to crypto are battered by the bigger market. So crypto is a subset. It is a subset of a far bigger asset category market. Crypto is here, C, and all assets for appreciation and investing are here, which includes debts, bonds, equities, indices, precious metals, derivative tools, hedge funds, all forms of deemed asset categories. Go as far as vintage cars, Persian rugs. Guess what? They'll all go down in purchasing price. Van Goghs will all go down as perceived assets when there is a sucking out of the liquidity out of all markets. They all shit the bed. It is a fact of life. And people will go, no, ours is different. Bitcoin to the moon. It's got to go its way to being 100 trillion market cap because it's going to replace all money. It's the alternative system and all of this. They will tell you that. It is like early morning scuba diving when you jump off and you're in Northern Europe, you're somewhere near the bearings, and let's say you've got a wetsuit on. You're going to piss in your suit. You can say, I don't piss in my wetsuit. I'm afraid the minute the cold water bites, you piss in your suit. That's what happens. And when there is a liquidity removal, everybody pisses in the suit, including people that want to hodl and want to stage and say, I am going to grit this out. I will hodl it all the way. I'm not locking any loss in. I will come back. I'm not leveraged. Eventually, institutionally, they get tapped on the shoulder and say, you don't have a job anymore. Close your positions. You become a forced seller even when you don't want to sell, and the decision is taken out of your hands. The bank's gone bankrupt. You can't hold your position anymore, mate. No, but this is going to come back up. I know it. It's going to be 100,000 at the end of the year. Doesn't matter. You didn't get to survive. The balance sheet, the counterparty risk, the everything is bust. Your credit line for trading, it's all bust. You're down. Close the position. Everyone else is down. We're having the worst year of our life. We're going to lose our credit. Close your position. It's how it works in the institutional world if you have a big enough move in all markets. So then the question is, how bad are things in the other part of the world? And I'll show you one chart that came from an article that I was sharing again with the community, just on margin lending. This is margin lending in equity markets. And you'll think, but I'm a crypto trader. Why do I care? Because the Robinhood kids are also in crypto. They also have access to crypto. And when they, remember, the prices are determined at the margin. When they panic sell out at any price, they are determining the price. Your hodling does nothing for market making when there's a panic on. You're not buying every bedwetter, wetsuit, urinator's crypto goddamn currency. You are just watching in horror as a red line goes down. And this is the margin debt growth chart. Dot-com boom, 60% change on the previous 9 months. Washout till it's actually minus 30% down. Pre the great financial crisis, that's what the GFC stands for, going into 07, started to unwind before the Lehman bust. You will get a Lehman bust moment. They will have a deflationary strike of some form or another that's going to come. Something will break in the financial system. The Fed is assured to damage the economy. It is too fragile. The US consumer, if you watched on our Market Sniper channel, the interview with Danielle DiMartino Booth, the US consumer, 80% of them are already significantly poorer. And as a result of inflation, their income increases have significantly lagged inflation. Their disposable income is significantly lower. And guess what? There's no stimmy. That doesn't go with tightening, not at all so. In fact, we're going to stop buying debt, and we're going to increase interest rates, and we're going to make all these things go up, just as people have committed, chased in to buy that mortgage, were outbidding each other 3 months ago. Now it's deathly quiet. This is your pandemic post margin debt level. These are your call buyers on Robinhood. This is your coming of age of understanding that your little asset class doesn't get to not pee in its goddamn wetsuit when everyone else does and the water hits cold, ice cold. And that is the hardest hitting fact that so many of the participants in crypto will not get. It is no longer driven just by the drivers of your industry. You don't get to be a trillion market cap and not rely on big amounts of money to sustain it there. And when those amounts of money withdraw and you have panicked retailers getting out, you get a red line that can fall and fall and fall. So just with that single understanding of, I call an almost similar crowd, the Robinhood Brigade in their call options, all holding on to their AMC, their GameStops, and their Tesla calls. Guess what? Eventually, even the likes of Tesla and Apple will fall. You look at ARK, which is Kathy Wood's investment. She's already horrendously down, and the rout has not even started. We've got to take a look at this equity ETF. This is ARK. Oh, by the way, look at that inverted structure that we were drawing and modeling. That was a long time. I forgot I even had that. This thing is throwing it down now. This thing is throwing it down. It made its target. It had a rally back into the funnel, first in the new trend, and now we're getting overperformance. How ironic. I didn't even realize I had a draw. It's been a while since I've looked at this. This was the great alpha performer, and she did exactly the wrong thing at exactly the right time. She started digging down into higher beta, greater risk equities, just as the cycle was turning bad. She became the sole elephant in the room buyer as the cycle was turning bad. So we got a little bit of a gremlin on this thing. It won't clear it. Forgive that line that's in the wrong place. You're just mucking around, aren't you? Look at that. Another continuation to the downside. And here was your first performer to target now. Overperformance sets up another structure. Spiller, thriller, properly down. It's not beyond the realms of possibility that this level of support is tested and revisited again, and potentially even in forced liquidation environments even further below. She will be a fallen angel. The game has just begun. The damage has just begun. And this is our pivot of defense. Puts on this could pay exceedingly well. By the way, that would be a chase. It's already selling off quite a lot. It's not necessarily a recommendation, but I see the chance that this will lead to lower, lower, and lower. There is no earnings. There are no dividends. It's highly speculative, future metaverse plays that are a bunch of kids with a .com type stock future. Some of them will be winners for sure. That's going to take a lot of time, a lot of effort. And she doubled down and went higher beta as the cycle is ending. The Federal Reserve, 2 years, March 2020 is coming. The last time we had the macro deflationary event, the economy was falling apart 19 at September, October with the repo markets and everything like that. Everything is set up perfectly for a major risk-off collapse. And you want to hold your cryptos long. And I'm saying to you, defense, defense, defense is the game. And the more I'm seeing of today, the more highly convinced I am that it's not a safe time. Guys were saying, but gold and silver's up. And I'm saying I am not buying the gold silver bull market with a major potential liquidity-based collapse potentially around the door. Let me just tell you what we're looking into. Everybody's saying, yes, here we go, here comes the final gold. And you will have Peter Schiff crowing at the crypto guys. So now time to give a little bit of a knock to Peter Schiff as well, who will take the opportunity, I'm sure, to highlight how awesome gold is doing and how terrible crypto is doing. Man, this jaw tool is getting cranky on me. I will warn that this level over here that we are seeing, this grind line, if there is a major risk off event, can actually break to the downside. Yes, gold can go down in an inflationary environment. It absolutely can if they suck the liquidity out of everything, because institutional funds holding gold will have to become sellers of anything that will easily sell. Anything that's holding up that doesn't lock in as big a loss as an ARK share ETF, they will sell if it's not yet down to raise funds so that they can continue to hold their biggest losing positions. That's what people do. They do dumb stuff. So will not. Gold needs to get above this level here to start to be even thought about seriously. That's the 1890 as a potential runner over here. There is every risk that it can go up and come as hard down as it did there, and there. Why? Because of the liquidity squeeze. I am a long-run precious metals bull, guys. You're watching a crypto channel and you're seeing gold. You're seeing dollar index. You're seeing a whole bunch of things because it's time you started to understand. It's time you started to understand that right now, the main game. And this happened to me. I was on Real Vision and they invited me on crypto, and normally I spoke about crypto and I spoke about the FX markets, and they were saying, bring it to crypto. How does it touch in crypto? Because the collapse of the euro Swiss franc, the collapse of the euro against the USD is a dollar strength period. It is going to be terrible for anti-fiats, which will include gold and silver. Because it will be fear-driven. That is not a time people buy risk-off assets. Your institutions will go in like armadillos into defense mode. I hold lots of silver. I want silver to go to the moon. But this single candle up here can be squashed down as well. The gold-silver ratio is flipping, and they are doing better than Bitcoin right now. So we can maybe highlight that. How is gold and silver doing against Bitcoin? Right now, better, because in gold and silver, there is a bet on failure that is intrinsic and physical, that actually the Bitcoiners that tell you they are electronic gold are not getting. So the very thing they assure you they are providing, they are currently not getting. They are deemed a high beta, that means very volatile, risk-on asset. They are not getting the Fed failure gold label that they espouse to you they are. Gold is getting it. I'm sorry, it's how it is. Gold is getting it, but gold can only continue to do that and will continue to do that unless it will be derailed too, and so will silver, if there is major liquidity scare. You're talking about banking hacks, you're talking about crazy stuff on supply chain, you're talking about a drama, but you're talking about the Fed tightening interest rates and showing they are tough and going and crushing it. So let's take Bitcoin and let's divide it by gold right now. And you think you're on the fastest horse when you're in crypto. And I'm here to tell you, it's not true. It's not true right now. It has been true, of course. I'm a pragmatist when it comes to crypto. I am not a fanboy. It's not your freedom. It's an on-ramp for central bank digital currencies. That's what Bitcoiners serve to do. Capture the libertarians, have them believe they're running away from state. Bitcoin fixes this. How many tweet it? Maxis. And I've seen others say, I'm 99% of my wealth is in crypto. Bitcoin fixes this. Bitcoin is electronic, digitalized on-ramp for what will later become digital money. Let's get gold as per COMEX. Let me just get this correctly. We can probably choose gold over here. It doesn't matter. That one will do as well. Dollar per ounce price. So this is how Bitcoin is performing right now divided by gold. It's actually bleeding out lower. It's run that technical low over there. Now, could it get support somewhere here? I don't know if it will. I don't know if it will. So the scenario we gave you, we've given you scenario number 1. We're now talking and making the case for scenario number 2, which has been our primary community position more and more and more. Scenario number 1 was it gets a buy before this level. And by the way, there's a 3-wick, almost 4-wick low here. And I think this is going to get run on these 1, 2, 3, 4 lows. That is Bitcoin being worth 15.5, around 15.75, I would actually say. Let's just get a measure for you. This is the lowest one here. Lowest point is 16.2. 16.2. You see that? 16.2. 16.2. I'm going to suspect that actually, as a higher beta, the scenario 2, so scenario 1 that we covered in the initial video was, could this be the low, was these technical supports against the NASDAQ and against the dollar. That's not against gold. We would bottom out at some point before running these lows and start a journey back up. That is the benign scenario. There isn't really, the more and more since I've done that scenario 1 and the more I'm discussing scenario 2, I don't see very many models for a benign scenario. I don't see too many ways. This isn't cataclysmic. It is a slow motion car crash. So the scenario 2 that I'm discussing, which is the Klaus Schwab, the Federal Reserve, all of the risks to the downside, the liquidity panic, is likely to see this trade below 16.2. That means Bitcoin will be worth less than 16.2 gold ounces. Now, during the risk-on period, and as they've absolutely created hype and pumpermentals for crypto, which has A, taken people out of buying gold and silver, which they don't want, which is physical. B, kept them out of cash as well. which they don't want. They want digitized money and digitized gold. They are selling you crypto as digitized money and digitized gold. Don't get me wrong. I'm going to be participating in this for upside when the upside is there. I do not want to be the bag holder on a major liquidity crash that could see. It's like being the guy that could have bought at 3K instead of being the guy who hodled through 3K when there's a major capitulation like there was on the March 2020 event. And for those of you that think, yeah, but it's already come off so much, I'm afraid it could come off quite a bit more. So scenario one is this blue line. The scenario we're discussing today, which we will save for our favorite color, TG Pink, is one where actually you trade through the low on the Bitcoin versus gold. Don't get me wrong, gold will probably be going down too. My problem for you is that Bitcoin could be falling further because the price will be at the margin and there will be panic sellers. You say, who are these panic sellers? All the hodlers have to do is sell. You don't need a lot of people to trade. It could be on very thin volume, but a few flushed out, leveraged hands that are still out there, or people that just can't take it anymore. The news will be terrible. It'll be the end of the world and a lot will give up hope. And you'll say, but, we've already had 90% corrections for Bitcoin and it's always come back. And you will be right about that. It will come back. That doesn't stop forced sellers from selling. Okay, so that was Bitcoin divided by gold. Let's give you Bitcoin divided by silver, which has been even further overperforming gold. Gold-silver ratio has turned. This is actually my personal favorite precious metals. We can go with the futures. Let's take the continuous future there. In fact, the Bitcoin part of that should again be the 5-day Bitcoin. So I will take that out. Let's do it again. Go BTC and divide it by the silver. Be the pragmatist, don't be the believer. This is a marginally higher high and a nasty spill. And you were at one point at your highest point, high, you needed 2,820 ounces of silver to buy one Bitcoin. That's now at 1,640. This absolute low that it fell down to was 1,100. Are we going to make damn, this line, it just pops on every time. You bastard. There we go, it disappeared there. Are you going to make the rising wedge scenario where you bounce prior to here, scenario one, or do you, in a panic sell-off, make a broadening structure with a lower low like that, megaphone? And I would expect to run that low if we are to get the Fed tightening rates, rolling back QE, and trying to win back credibility for being aggressive on inflation. The consumer is wrecked. The equity markets will fall. You already saw Netflix today losing a massive amount, 2 years worth of growth on a major miss on subscribers. Much more vulnerable than something like Apple, which is highly cash generative. Let's just pull up Netflix and show you what happened. And you go, why are you talking about Netflix on a crypto channel? Because you need to understand how the market reacts to disappointments in the real world and recognize you are part of that real world. Netflix couldn't happen to a nastier pedophile programming entity, he says. Or I've just mentioned the P word. That's the YouTube rating gone down the toilet. Don't forget to give us a like and a share for our free views and takes. We will not be getting the algorithm as a friend. This is a big move back down into a previous ledge. By the way, small bounce here and you're on a head and shoulders for a deeper dive. This is what's happening. So you were as high as $700 and now you're trading 508 and looking to go sub 500. So that is what's potentially possible as really hurt consumers stop spending and they're not getting stimulus. So what do you think about Ethereum? Ethereum, all the other alts, the crypto alts will also be selling off. This is not going to be a Bitcoin phenomenon. Don't view this as me taking on and being mean to Bitcoin. This is a crypto asset class problem. It is a crypto asset class problem. The marginally higher high here is a problem. We never liked it then, and we still don't like it. This was big, lengthy grind going up here. Big, lengthy grind in the rising wedge over there. And this has had a number of grinds on the down legs here. And you've had a few ugly ones to boot. Ethereum will not save you where Bitcoin doesn't. And in actual fact, the structure on FBTC, so we've always positioned on the bull environment for Ethereum to be overperforming Bitcoin. And we have a structure and a jaw. That structure may fail. So let me just show you this. Ethereum, Bitcoin. We are dipping into this funnel if the damage comes in for risk on assets, as we have highlighted, and we've shown this chart many times to you. As long as we're in a bull phase, we're calling for 10% FBTC. It still might come, but if we go into scenario 2, the Fed-induced crash and liquidity-based event, this could indeed invalidate and come back to the 6.6 levels. And this entire structure gets spoilt and have to rewind up again. When we are risk on again, which we will be again at some point. It may even be the second half of this year if we get this crash done in the first quarter. I'm all for it. Get it done, clear out the speculative money, smash it down, tell us all that's going wrong in the world, lock us down again. They're going to probably do whatever they want to do. Do your crushing of the market. I fear some of the potential they have for deflationary based events, but this could spoil. It could stay, that's the level. It's got to stay above 6.86. And at the moment, it's not doing that great. It's been giving back ground quite ostensibly. So we'll see. It hasn't failed yet, and a stop is there for a reason, and we'll be standing by it. But it starts to become a problem. What about other cryptos? They're all going to come in they're all going to feel the downdraft of the macro events. It's going to be, I'm afraid it's going to be that way. And some of people will say, hey, you'll get the hexagon saying, but we're counter. Actually, if it's as big as and intense as it potentially is, you can have 4 sellers in the hexagons as well, and something that doesn't trade a huge amount of volume, you could get somebody who just has to get out and is smashing the stack. And who's going to be buying? There's going to be max fear, max concern. The narrative is going to be absolutely awful. You're going to have to be steel balls to be buyers in that environment. And that is my great concern for all of crypto, including those that think that they are going to be completely contrary. By the way, Sol, what a beautiful upside HVF it had, and it gave you the last of the summer wine. It has come off an immense way. Look at that nip at the top. Forgive all these lines on here. Since then, down, down, down. All the way. Down, down, and down. Rising wedge. Now, don't go in and panic sell, because you're getting a hammer. There's been a lot of selling already. You will probably get a period where you get some form of rally. You can see that with these down legs, there have been periods of rally, but there have also been some brutal sell-offs. This is hammering right now. You might be able to get out a little higher. But I do want to say to you, the real drama has yet to happen. Cathie Wood is already down immensely. Netflix is already down immensely. The battle has actually only just begun. It will get worse before it gets better. scenario 2 is going to lead to a lot of pain. Let's have a look at a couple of those other asset class indices that crypto guys will try say, it doesn't really belong in this video. Well, what is the S&P doing? Let's have a look. Oh, one other point, by the way, seeing as we're doing a crypto video but covering so many aspects of other markets. These prices of oil do not help the consumer. We have said already that you'll go north of 100 at some point and make all-time highs. So we've called for $250, not now. And if you get that liquidity crisis, the oil price will sell off, but not as much as you will need it to. And it will go higher when they come with the cure. That will be more printing, more stimulus, and all the other things that they do before. And will repeat again on ever greater scale to win you back. So what has the NASDAQ done? Let's have a look at the NASDAQ. Oh boy, is that a horrible candle. You traded up and were all green, then got smashed down and closed on a low. And tomorrow's Friday when people want to close and be square over the weekend. Ouch, even that. This correction, look at the correction of March 2020. This correction is not even close to reaching the scale. This is a log scale of the health-based events of 2020. Why do I even bother to say that if I'm going to use the P word? I may as well just call it for what it is. But that correction, this is small beer so far, and it could certainly, the valuations are well beyond what they were in the sell-off of 18th of February. So you are more giddy, more drunk, and higher in terms of valuation metrics. So the sell-off could be larger. If we were to do a percentage sell-off on there, from there down to there, you had a 30% sell-off. If you were to do a 40% sell-off, this is where you would be on the NASDAQ. Down at 9. And it could do 50. It truly could. You'd be down at 9. You would be taking back a large amount, visiting the previous highs, very close to visiting the previous high, 42, 43%. Now, calling a 40 plus something percent, these are on cryptos, is a huge collapse. But we are in huge fear moment times. The Fed is going in the wrong direction with the consumer absolutely destroyed at the same time as inflation is running away. So you now have the twin problems of destroyed consumer and record high inflation and escalating with a Fed that's now focused on fixing the inflation and your consumer's ruin. This is going to be a very, very destructive period. It's the only thing I can conclude. And I'm afraid they know that the market wets the wetsuit, pees in the wetsuit. And they've accepted that that is a circumstance and a cost that they will have to cap. And this is mid-cycle elections. The Democrats are going to do badly. The market will be falling. Biden will be getting low scores, etc., etc. And they want to get that out mid-cycle. They don't want to be doing it into the teeth of the next full election. So we'll show you how Tesla's doing. That's currently been unstoppable, seeing as we're doing such a free-form vid. Apple, still early doors for these to correct in a downside way since 2019 lows and 2020 lows. This is plenty downward space. And these have real earnings, and they will be corrective. This was the lows for Microsoft at 132. It's 301. 132 was the low 2 years ago. It's 301. It's unbelievable. So guys, that is it. I'm afraid I'm going to leave you with scenario 2, which is not a crypto cycle. I don't think the crypto cycle wants to be bear. The crypto cycle is going to extend. It is going to be superimposed upon by bigger cycles that are almost tidal waves that will swamp anything good that was to happen on crypto with bearishness. We will see. Maybe scenario case 1 will be there. Maybe amidst all this liquidity scares, you're going to see Bitcoin a beacon of strength. And it will be scenario 1 that I did, close to relative lows. We divided Bitcoin last time by the NASDAQ market as a high beta. And we shared this chart with you extensively. You're now comparing two high risk components that are both equally overbought. This does not necessarily look like a bottom. The red candles here, hammer, red candle. The crypto, when it gets really ugly, crypto is leaning to the offside. You've got two red candles either side of a very small hammer. This can go lower. And in fact, it could run the low. It could run, not to say, but it could run the low. Your scenario 1 needs particularly that crypto stays above that low. It will kill all possibility of a continuation pattern if we have a huge sell-off, and then we'll be talking about other technical structures once it's a risk on again environment. Note how this spill is far less extreme when you are dividing Bitcoin by the NASDAQ that also spilled, and how you got such a perfect little primer. This is a great structure. In fact, let's take the eyeball off. We've shown this one to you a couple of times. In fact, I'm not sure. It's not populating the jaw anymore. I probably deleted it. But this was a great little wind up for your first cup gold nugget. Squeezy, squeezy inside of a macro squeeze. That was your technical wet dream all come home. That was your one moment where you could have been net long leverage crypto, and you should have stayed and stayed. And there was your neckline for your head and shoulder that we called on this channel. Okay, guys, that's your case scenario 2. I bet you don't like it. Leave your comments below. Tell me what you think. Are we going to get the Fed liquidity squeeze and crisis in chasing, tightening at the worst possible time? Are we going to see major overvalued equity markets lose 30, 40, and 50% from current levels where it's already begun correcting? And what do you think that will do for crypto? Is crypto totally in its own bubble and immune to this, given the institutional buyer? Will it go a little bit down, but less so than the others? Will it start to go up relative to the NASDAQ, even though it's going down in dollar terms, or will it run this low? I'm interested in hearing what you guys think. By the way, if you want to be part of our community, getting defensive, we've put in amazing structures. We've met a lot of our community members down here, Panama Way. It's been awesome to see them at our offices and chat. They're popping in and trading and checking it out. We've actually had a social where we went shooting AR-15s and shotguns and a little bit of prepper shooting fun. We had written up some interesting names on those targets, I'll tell you. If you want to be preparing yourself for what is a reset event, financials, and you're prepared to be pragmatic, not to be totally bought in and totally believer and to any one thing, but pragmatic about what is coming. We may be your kind of people. We're into building wealth in reset times and protecting it in reset times with an overreaching statist totalitarianism that is going on right now, and putting and holding ourselves in the best asset classes for the moment and trading defense, because it's not what you make, it's also what you keep. Okay, you know what to do. themarketsniper.com. We look forward to catching you again when we'll do case scenario number 3. And forgive me, I was unwell for the delay in the case scenarios, but I look forward to updating you all on here further as it evolves. If you want these updates earlier and more timelessly, you will need to be in our premium community. Bye for now.